from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, from Chicago. It's Thursday, October 8th. I'm your host, Charles Brown, Portfolio Manager with CB3 Financial. We are so glad you are here. What a week it has been since I saw you last Thursday, live anyway. We had an update on Monday, but since I saw you live on Thursday, the president was diagnosed with COVID-19, went to Walter Reed Hospital, has been discharged from Walter Reed Hospital. We've had the vice-presidential debate. And now Nancy Pelosi wants to use Article 25 to have Trump removed. I mean, can you believe all this happens in 1 week? Sure you can. This is the United States. From COVID to the markets to politics to clarity, this is CB3 Live. All right, guys, let's see what we've got going on here. What do we have going on here? All right. Regeneron is now in front for COVID-19 treatment, and you'll see why in just a minute. The president had something to do with that. Stocks are staying strong pretty much as the fourth quarter of this year begins, and then debating the debates and their effect on the 2020 election. So, COVID America, Corona America as I call it, some pretty monumental news this week. First of all, the number of deaths recorded on a per day basis. You know this has been in three digits for some time. 337 is the lowest single day number I have seen since back in March. Yes, there are tons of cases. I understand that. But still, the number of deaths is being reduced every day, and that's just a great thing. The survival rates, I showed this last week, but if you guys weren't on here, I want to make sure you see this. If you're from 0 to 19, in other words, you're a baby, 99.997% chance that you will survive COVID-19. It's about the same for 20 to 49, almost the same for 50 to 69, ticks down a little bit for those above 70, but I'll still take a 9 handle as far as surviving this pandemic. I think that's really positive. This is a new graph. I've never shown you this. I didn't know it existed, actually. This is a histogram that shows which states were infested first. Infested, that might have been a Freudian slip. So California obviously led it off with Washington, but now they're going back and saying the first cases really were in California, and then it got really bad with that nursing home in Washington. But if you follow down here, you'll see a lot of big states, and it really it starts to pick up pretty heavily by the 1st or 2nd of March, but they were starting to see cases in January, and we've not seen this data. This pandemic started sooner than we thought, and I don't think anyone had any way to recognize it because we weren't looking for it. So Regeneron, as I just mentioned, has now asked as of last night, so this wasn't even mentioned in the debates because this hadn't even occurred until about 10 o'clock last night Central, asking for emergency use nod to be able to use, asking for from the FDA, their REGEN-COV2 investigational antibody combination for emergency use has just a few doses in retrospect. In perspective, I guess I should say 50,000 patients or so, and they can ramp it up over a few months for 300,000, but they are ready to go. They are asking for permission. They're ready to go, and their most potent proponent of their drug is the president. He was given this at Walter Reed Medical on Friday and then over the weekend and was released Monday. his comment, you can see it here, it kind of went viral. Well, I went in, I wasn't feeling so hot, and within a very short period of time, they gave me Regeneron and other things too, but this was the key, and I will do all I can to help this treatment be approved. As you might suspect, Regeneron stopped trading for a little bit in the pre-market today, but they got a nice little bump from that endorsement from the president. Eli Lilly also submitted an application for emergency use authorization. So not for testing, emergency use. Theirs is more what's called a monotherapy for higher risk patients. I think I've been saying over the months here that all of these companies in play, and there are 4 in tonight's report, are targeting slightly different sectors of the COVID-19 pandemic patients, which is good. We want to have specialist vaccines for each demographic. This is following this study that they've been doing, this anti-SARS neutralizing antibodies for mild to moderate illness. But they've got their niche carved out. Moderna also has a niche carved out, and they're basically saying we're going to stand aside and not even track the patents on this. So the patent covering their vaccine, they're willing to just set that aside and license the patents to other companies afterwards. So that's kind of a participation plus there. And then Johnson & Johnson supplying up to 400 million doses. Now, this is an enormous number compared to the previous companies we mentioned, but I don't really have any more details, and they really haven't published how their vaccine is different from the others. But I've suspected all through the summer that these might all come to a head, ironically, in early to mid or late October. And we have 4 companies very much in the game right now, which I find really exciting. So I want to ask you guys, we'll start off with tonight's first question. What do you think of Trump's response to having an experience with COVID-19? Answer A, Trump was appropriate about it. Answer B, his COVID-19 was cavalierly handled. Okay, answer C, he came out looking better than ever. D, did Trump really even have COVID? In other words, was this a stage plot to get attention? So while you guys are answering this, I'll check the feed here since you're about 20 seconds behind me. Evening, Charles. Good to see you. Hey, Mark. How are you? And Debbie from South Florida. How are you? Good to see you. And Greg from Illinois. Nellie from Atlanta. Medical options are always good. Yeah, so we're really happy about this, Mark. I haven't seen you in a little better. Mel, you were on last week, but we got 4 companies coming out here, right at the forefront tonight, and it's really exciting. So, but glad you guys are here. Nellie's got a B there. Was cavalierly handled. Okay, yeah. Probably some people thinking that. Appropriate about it. Looking better than ever, says Mark. Greg, yeah. So Greg and Nellie agree, and Alice appropriate about it. Okay, well, there are going to be a lot of opinions on that, and I don't think the last word has been said about how President Trump handled this case with COVID-19. There's going to be plenty more in the 25 days we have left in the campaign. So for the year, the NASDAQ today finished 27.3, obviously not today, but for the year. S&P up 6.7. Dow tried to finish positive, just couldn't get it done for the year. Russell down only 2.4, so this gap has really closed, and this is exciting. I'm going to talk about this more in the program. The gap is still 29.7 between the NASDAQ and the Russell, and that is why we are mostly in the tech sector. For the first time in my career, 30 years, I had a 40.01 return here in CG. Those of you that are watching, I see the names there. Every one of you has at least one CG account, and it's just on fire. Guys, it's not genius. I've been saying all along, I follow the data. And if the data says stay invested, I stay invested. That means I keep you invested, and that's why you're seeing these returns. Notice that our best return was 9%, but our worst return near the low of March was minus 13%. So, we do recommend diversification. Some people have everything in CG or SG, the 2 really aggressive programs. And if you want to talk about asset allocation, certainly we can do that anytime. But It's pretty volatile being in these lead growth programs, but you can see it's been very rewarding this year. Many of you are in DG. As you know, Alice and I, for our family trust and family accounts, trade all 4 of our programs up still 13.7, really strong return compared to the S&P, obviously not versus the NASDAQ, but a really strong, you can see it's beating all the other indices there. So if you haven't looked in your accounts for a while, that's what's going on there. So one of the reasons we continue to see money moving into the market is the 10-year yield. Just look at the green circle. You don't need to worry about anything else. That means the yield of the 10-year note is rising. When the 10-year note yield rises, that's because people are selling bonds. Remember, the price and the yield are inverse when it comes to bonds. Why do we like that? Well, we want to see the yield go higher because people are selling bonds and taking that capital and either going to the sideline, which is rare, or they're putting it in the stock market, and that's what's happened so far in October, and that's a positive sign. Another indicator that's really important to me are the transportation stocks. So that would be FedEx, UPS, trucking companies. Just really important to see the transportation railroads doing well. They are breaking out to a new 2-year high right here in October. Traditionally one of the most volatile. It can be profitable. October is not a bad month performance-wise like September and August are, but it can be volatile. So far, so good. And then the industrials. Now we've added industrial exposure in DG and a little bit in CG as well. For those of you that are following, notice the green circle. We have a triple top. If that breaks through there, you're going to see companies again like FedEx, UPS, Caterpillar, and other industrials, breaking out to new highs. Why is this so important? As I've been saying really since day one as a public speaker, those of you that have been following me that long, in a secular bull market, we want to see all asset classes and all sectors participating. What's been leading this movement high since the low on March 23rd? Technology, consumer discretionary, and communication services. Now we have industrials joining in, and that's a big positive. Real glad to see that. You don't need to worry about the type on the screen. It's just, really small to see. But what I've done is I've shown you a channel here. So if you go back to 2010, I'm going to call that the beginning of the bull market. Now, technically, we went into a bear market for a few weeks and then exited it, and we are back into a bull market. And I want to show you what that looks like on a chart. I know that it felt very volatile when it happened, but look at this channel. Do you see this is the S&P 500? Again, all you need to do is just see the line moving. And you see where I circled in red there? That's the aberration. That's where the channel broke down but immediately recovered. Now, immediately doesn't mean 5 minutes, okay? So the low was March 23rd, but by mid-April, or at least the end of April, the NASDAQ had pretty much exited the bear market and re-entered a bull market. And that's a positive. Okay, so this is proof that we are still in a long-term bull market with that aberration in red that I just circled. I show you this chart every 3 weeks or so because it's so important. This is 100 years looking at the S&P 500. The red areas indicate bear markets, secular bear markets, and the black lines with the arrows represent secular bull markets. Look at the length of the bull markets and look at the length of the bear markets. The bull markets are longer. Markets go up more than they go down. Although because of recency bias, that's a word I've added to your vocabulary, I hope, sometimes we get a little dismayed when we have these down times and it seems like they'll never end. But all you have to do is look at a 100-year chart and see, no, that's what eventually the market's going to return to. So I still believe we are in the beginnings of this with another 8 to 12 years of secular bull market performance. That does not mean that we may not have a bear market. We just had one. Okay, and we may have another one. We probably will, but that doesn't change the overall secular trend. So we keep talking about the U.S. being in a deep recession. I'm postulating today that really what's in a recession are the big cities in America. And I'm not going to be too political because of how they're run or if they're blue cities or whatever, but the drop in hiring activity almost totally traces back to big cities because in the rest of the country, hiring activity is now back above pre-pandemic levels. That means back to where it was on February 19th, the previous high in the S&P 500. Just to give you an example, this is lost leasing revenue in San Francisco. Now, I see that it's going pretty much straight down since 2018, or at least it's going gradually down and then dramatically down in 2020. So there are lots of reasons for this. Certainly the pandemic is part of it. Certainly the police situation is part of it. Certainly the no stopping of the homeless on the street. But this is a city in crisis, as is many other major cities in America. But this is an indication to me that the cities may be suffering, but many other areas of the country are doing just fine. So GDP, we saw this massive drop in GDP, 31 and change percent. Never seen a drop that big in one quarter since the whole time I've been doing this. But now the expectation is that third quarter, which was just finished, that's July, August, September, is going to be up almost 33%. Have never seen a number that big, followed by a number that I've never seen that bad. Now, we don't know what this number is, but conveniently, the first read, as they call it, there's always 3 reads on a GDP number. The first read is going to be the last week of October. Now, that wasn't planned by any administration. That's just the way that the Oxford Economics and the Labor Department and the Bureau of Economic Research puts out this data. We will see, but if we have a 32.7 growth in the third quarter, that's going to be really, really bullish. I wanted to show you essentially the same chart, but to break it down into what components are contributing to this GDP. So consumption, residential investment, inventories, exports. I mean, what so much of this is, look at the orange part of the graph, that's consumption. Consumers were scared out of their money, so to speak, in that first and second quarter, the end of the first quarter and all the second quarter, but that turned around in the third quarter. And I think we're going to see that when the data is released later this month. So here's a positive note from Sam's Club, adding 2,000 workers. So if people were concerned that, obviously the pandemic, had it happened in September or October, would have just killed the Christmas season, which so many retailers depend on. I mean, it was bad enough for the retailers when it happened in February. But here we are still in COVID. But with the Christmas season approaching, Sam's is saying, we're expecting a lot of people coming in. 2,000 permanent full-time workers. These are not part-time. Read that carefully. Permanent full-time workers for the holidays. Love seeing that data. And we talk about in previous episodes, and I'm going to go into homes a little bit later, but what's the second biggest item that people spend money on? Discretionary money. Cars. Okay, so the total amount financed for car loans, I had to circle that because I wasn't sure you were going to see it. You see the red circle there? Look at that huge bump. People are buying more expensive cars. And they're doing it because rates are low and they have confidence. If rates were low and people were scared, they wouldn't be doing it. If people were very confident but rates were 8.5% to get a car loan, they wouldn't be doing it. Those two confluence together and show a very bright picture of America as far as the second biggest consumer item, in the economic profile. So U6, that's the number of unemployment. This is a graph where we want to see the numbers go down. I need to be careful as I go through these always. We want this number lower, so we're heading towards under 7%. U3 is the number you may be thinking about. That's the pure unemployment number. U6 is the number when you include those that are underemployed, which is different than unemployed. And that number reached up to 22.8 and has now dropped all the way to 13, which I realize is still a catastrophically high number, but it's moving in the right direction. Unfortunately, the unemployment profile is a lot grimmer for those with less education, and there's been never a more poignant chart than this. This is from the Labor Department. Bachelor's degrees and higher, you're basically back to where you were as far as job offerings and availability. Some college, high school, less than high school, really, really tough. And that's because fewer people are working, and if employers have their choice, they're going to go with more highly educated individuals. So I'm guessing this is going to be good for the education system, because those that have made it through this will probably realize, whatever age I am, probably best to go back and get some increased schooling. Job openings, we're back to 2019 levels, almost 2018 levels. See the red dot on there? That's showing the amount of jobs that are available. If you remember, back in February, we had a time when probably at the last 4 months, October, November, December, January, before we hit the February crash, where there were more job openings than there were people that could fill them. I mean, that's how strong the economy was, and we are getting back to that now. Very encouraging. Don't listen to what they tell you in the news. This is the hard data from the Labor Department, okay? Unemployment level for part-time people. This is, dropping down. I'm just trying to show you the trajectory here. Normally you see this number rising until we exit a recession. We're seeing a plummet. Again, we want to see a low number on this chart, even as we are still in a recession, although we may be exiting it once we start to get the GDP numbers at the end of the month. And the job recovery phase here, you can see in previous recessions, normally we see a real big increase, and that's what ends up ending the recession in America back in 2000, 2008. We don't know yet where this is going to end up, but I believe it's probably going to double from where it is right now to get back close to those recovery phase trajectories that we saw in the previous two recessions. I've been showing you the manufacturing index from the various Fed areas around the country. There are 12 of them. These are the Federal Reserves. This is Richmond. You've seen the Empire. Remember my joke, Empire Strikes Back? I've been trying to go around the country and show you it's not just one or two Federal Reserve districts. It's virtually all of them. This is Richmond. This is Dallas. Look at the red dot. We're back to where manufacturing was in 2018. So again, these portions of the economy have made pretty much full recoveries. ISM, look at the red dot again, back to 28. This is Institute of Supply Management. Survey taken 56, the actual number 57.8. I know it's just a ton of data here, but guys, just follow the red dot. It's back to where most of these indicators that I'm showing you are back to where they were pre-pandemic. You notice I don't have restaurants on here, or theaters, or cruise ships, but many, many parts of the economy are back to where they were. Now, here's an astounding fact today. Chevron closed today with a higher market value than Exxon. The first time Exxon has been dethroned as America's largest oil company in more than a century. There is a changing of the guard, and it's not only that. Nextra, and full disclosure, those of you with GI accounts own Nextra. We've owned it for a long time. Is more valuable than Exxon as clean power eclipses oil. Now, I'm not trying to make a big green statement here. I'm just telling you the facts. Nextra, which is also a huge electric provider, but definitely a clean power, and that they can basically have a market cap higher than these two oil behemoths, I think is just astounding. So we're watching for that changing of the guard in the energy sector. The ISM data that I showed you earlier, I just wanted to put this quick chart in here without giving you any more numbers because I've given you so many tonight. Basically, when the recession started, the services sector and the manufacturing sector dropped at the same time. Services has actually come back closer to where it was faster than manufacturing. So I just gave you a bunch of great manufacturing data. But aside from restaurants, movie theaters, cruise ships, airlines, the services sector has really made a full comeback and is back to where it was in 2019. Just really, really great stuff. Construction spending up in August. Key takeaway from the report is that the total construction spending, despite the economic challenges, was up 2.5 year over year. Now, many times when I've been giving you this data, I've said, well, relatively speaking, this is good. This is an absolute number, meaning 2.5% over the previous year in absolute terms, no excuses about the pandemic, okay? So that's absolute real growth, not relative growth, but real growth. Median listing price on a home, look at this, it's just kind of hard to believe. We think that housing prices must be getting depressed during this time. Not at all. I mean that is at the top of the chart. I've shown this maybe 3 or 4 times over the summer, But and then people, are they mortgaging to the hilt? Are they putting 3 or 5% down? No. Many people are either buying cash, certainly 20, 25 down, not unusual to see. And that's why, look at the edge of the chart here, the amount of equity that people have in mortgaged properties continues to grow in 2020. I was stunned to see this, actually stunned to see that the percentage of equity in people's homes is actually increasing. 30-year fixed rate mortgages, that's one of the reasons why we continue to see an unbelievable amount of spending on homes, because the mortgage rates just keep dropping. I mean, we're seeing quotes at 2 3/4, 2 5/8. And part of the reason for this is that the number of homes sold continues to rise versus previous years. All right. So previous years, look at the, obviously it goes all the way out to December. But where we're trajectory wise right now, and I realize we're stopping there in August, but this is a positive number. So what's going to make it so we can sell more homes? Well, this is the exact opposite of that chart. This is the inventory of homes. This is the inventory of homes, all right, which is at an all-time low. An all-time low. I mean, I've just never seen the data. So look at the previous years. You can't find a house very easily. I have 2 out of 6 children looking for a home right now, and a third one who will be in a few months. But the inventory is really, really challenged. It just really is. So this chart is back. You guys remember this? This is the one that shows S&P 500 earnings. So I stopped showing this for the last 3 weeks or so because there were no more earnings coming out. All right. So we're now starting the third quarter earnings. We only have 21 companies reported out of the 500, but 90% have beaten their projections. That's the highest number I have ever seen. The average number at the end of the quarter comes in between 73 and 74%. This last quarter, we were about 78 to 80%. If this 90 holds, and of course we won't know this until early December, but that's just a staggering number. So, all right, guys. I'm gonna just look real quick here at Nellie. New homes are impossible to find in the Atlanta area. Yeah, I hear you. And again, we've got 2 children in different parts of the country, and a third one going to be looking in Texas, and just really tough. So you guys have seen this chart. Just in case you haven't done a screen snap on it, now's the time to do it, because I probably won't show it again. But it's just real simple, straightforward listing of what's each candidate's position. Reopening schools, China, trillions in new taxes, save coal and gas, build up the military. And I don't think it's biased. It's actually put out by the Citizens Action USA. And it's just a good thing to know. If you're still in the undecided category, I'd take a screenshot on it and study it, okay? So the share of people that think that one man or the other would be better for facing these challenges. So COVID-19, Biden handily wins. The economy, Trump handily wins. Healthcare, Biden wins. Racial inequality, it's not even close. Climate change, as you would expect, not even close. But then it flips back on violent crime. I'm not going to read through all of these for you, but the one that really interested me was abortion at 96 to 2. Now, at least half this country is pro-choice and half is pro-life. Why is that 96%? I don't know. It's a strange number. But anyway, I would do a screenshot on this as well and see what you guys come up with. So, and of course, the confirmation of Amy Barrett is continuing to be a very confrontational issue. The Dems have demanded on at least 2 occasions that this be called off because so many of the Republican Judiciary Committee folks have contracted COVID. Well, the rules permit that they can do their deliberations over video, but they have to vote in person. So that's going to be October 26th, which means there's ample time for that 2-week window. But I mean, all of this is happening as the final days of the campaign tick down. It's really just pretty astounding. So The data that I'm seeing this last week, though, is that more voters now, just look at the top line. I mean, there's a lot to take in, but just all voters, 37% wanted her to be confirmed, 34% did not. Now it's bumped up to 46% versus 31%. So the country is moving more in the area of, the Republicans have the right to do this, and if the Democrats were on the other shoe and had this opportunity, would they do it? Absolutely. So that's my take on this data. So last night's debate. Now, if you look carefully on here, you're going to see something that doesn't belong. So look really carefully. But during the debate last night, there was a fly that perched itself on Mike Pence's head. So I put that fly on here just for those of you that didn't get to see it live in real time. Now, many people wondered how that happened, but because I always try to work extra hard to find the very most data that I can for you, I did a little research on this and I actually zoomed in. I mean, really, really zoomed in. So you guys are going to need to lean up in your chair, look at the screen on this next slide. But this is a super close-up that I got while watching the debate last night. And this answers why this fly was on Mike Pence's head. So there you go. He was wearing a Make America Great Again hat. All right. All right. There we go. What did Americans think of the vice presidential debate? Well, there were a lot of opinions, as you can imagine, and I thought you might be interested in seeing some of them.
This is supposed to be a debate based on fact and truth. And the truth and the fact is Joe Biden has been very clear. He will not raise taxes on anybody who makes less than $400,000 a year.
He said he's going to repeal the Trump tax cuts.
Mr. Vice President, I'm speaking.
Well, wait.
I'm speaking.
It'd be important if you said the truth.
Vice President Mike Pence and Democratic vice presidential nominee Senator Kamala Harris just finished their one and only debate in this election season. Three important things worth saying about this debate. First of all, they managed to have a more serious, substantive, and civilized conversation than their bosses, President Trump and Democratic nominee Joe Biden, did last week.
Senator, I want to thank you and Joe Biden for your expressions of genuine concern.
Second, I think both Vice President Pence and Senator Harris managed to accomplish their main task in this debate, which was to look like plausible presidents in case circumstances require that. And that's really important in a campaign in which the two nominees are a 77-year-old man in the case of Joe Biden, and in the case of President Trump, a 74-year-old man who recently contracted coronavirus. These two people needed to look like plausible presidents, and I think they cleared that bar. But third, I think this will be remembered above all as the coronavirus debate.
The American people have witnessed what is the greatest failure of any presidential administration in the history of our country.
Democrats and Senator Harris view the administration's handling of the coronavirus as kind of a metaphor for the entire Trump presidency.
And here are the facts. 210,000 dead people in our country in just the last several months. Over 7 million people who have contracted this disease.
For his part, Vice President Pence started with the defense that the president took the most important and the toughest step.
President Donald Trump did what no other American president had ever done, and that was he suspended all travel from China, the second largest economy in the world.
Vice President Pence argued that the plan the Biden-Harris ticket puts forward to combat the coronavirus if they win the election looks an awful lot like what the Trump administration is already doing.
It looks a little bit like plagiarism.
You know, one reason that the Democrats like to bring up the coronavirus is they also use it as a way to enter a conversation about the broader subject of health care that the Trump administration wants to eliminate Obamacare during the pandemic.
If you have a pre-existing condition, heart disease, diabetes, breast cancer, they're coming for you. If you love someone who has a pre-existing condition, they're coming for you. If you are under the age of 26 on your parents' coverage, they're coming for you.
Now, one other subject of note that's going to be remembered from this debate is the Supreme Court.
Are you and Joe Biden going to pack the court?
Vice President Pence, like President Trump last week, managed to point out that the Democratic ticket does not want to say whether or not it supports a plan to expand the size of the Supreme Court and change the ideological makeup of the court.
Re-elect President Donald Trump, and we'll stand by that separation of powers in a 9-seat Supreme Court.
Yeah, let's talk about packing the court then.
This is an idea that is pushed by progressives in the Democratic Party, and the Biden-Harris ticket does not want to offend them by opposing it, but it also doesn't want to support it publicly because that scares some centrist Democrats and independent voters. So it's avoided taking a position, something Vice President Pence brought out during the debate, and something you'll be hearing more about in the weeks to come.
So there you go, folks. Who won the Veep debate? Now's your chance to weigh in. Letter A, Pence won the debate. Letter B, Harris won the debate. Letter C, neither Pence nor Harris won the debate. D, I had no interest in the debate. And it's okay if you put D. Nobody's going to say anything to you. So I think I've answered most of these comments while we were in the video there. Mark, not sure what you mean by only doctors in the hospital. It might have been responding to a half sentence, and now I've forgotten what my half sentence was. So glad you guys enjoyed that graphic. I just need to make sure you guys understand we're not a fly-by-night organization. So we try to have fun every once in a while. Pence won, says Charles. Pence won, says Nellie. Pence won, says Alice. Karen, neither won. Mark Burns, A. Okay, Greg, A. Where's Martha's vote? Keith, A. I know Martha's going to be an A. All right, guys. All right, that's good. That's good. So, stock market leaders appear most vulnerable to Biden's tax plan because corporations have gotten a really good situation since the 2017 tax relief bill. The technology sector is going to be susceptible to this, as well as susceptible to being broken up, a la Rockefeller with with Standard Oil in 100 years ago. So the issue with Biden really is that he wants to raise the corporate tax rate. Well, corporations don't want that. There's absolutely no benefit to them at all. It's just redistribution of wealth. It's taken from successful companies and redistributing it in ways that whoever's in federal government thinks the money should be spent. Well, they didn't earn the money, but now they want the ability to appropriate it. Well, that's not going to go over well at all. Okay? So, this is interesting. This literally just happened hours ago. So I mentioned this in my opening remarks. Democrats on Friday plan to discuss invoking the 25th Amendment, which gives the power to remove the president and have Vice President Pence take his place. I can't imagine what grounds they're going to have to do this. They would need everyone in the immediate circle of the president's advisors to go along with this, or at least a majority of them, which is a zero possibility. So Pelosi really ends up just kind of looking goofy here. She has also threatened to impeach him again, which would be twice in 1 year. But now she's saying she won't because he's not worth the trouble. I can't make this stuff up, folks. It's there in the lines. But all of this rhetoric and dialogue goes into the narrative for these last 25 days. Biden's proposed this $2 trillion spending bill just on the environment. So $2 trillion just on the environment. This isn't even on making new roads, construction, infrastructure, which is something that President Trump wanted to get done in his first term, didn't get it done. We'll see if he has a second term to get it done. But energy companies obviously are not going to be real happy about this because anything that's environmental will not, go over too well with them. So this also came out in the news today. It's like, this is a full-time job gathering these data points for you guys. But the commission organizing the debate said it was going to need to be held virtually. Well, President went on Maria Bartiromo's show on Fox Business and said, there's no way I'm doing a virtual debate. Not going to happen. Now, that's just something that Biden wants because he's a coward. Again, I'm quoting the president. So we'll see. Both sides would have to agree to it, or else it gets put off and there's another debate later on, or maybe they have them on the 22nd and the 29th. So this will affect next Thursday night. If there is a debate, I will be starting 1 hour earlier. So be aware of that, guys. If there is a debate, and Monday, and I'll be actually on the road Monday, but I'll probably do a short version of the Monday Market Mashup, just like I did when I went to New Hampshire. But we might know by Monday whether there's going to be a debate. We might not. If there is a debate, we will start 1 hour earlier. 1 hour earlier, that is 6 p.m. Central, 7 Eastern, and you can figure it out from there, okay? Just so that you don't have to miss the live debate, because it certainly will be spirited. So of all those attributes that I mentioned earlier, which is the most important one that American citizens look to make their decision for the president? Well, the graphic that you see on the screen is kind of a giveaway as to what really is what decides presidential elections.
Roosevelt in 1932, Kennedy in 1960, and Obama in 2008. These are all years when Democrats took back the White House from Republicans, and they are all years in which the S&P 500 was down in the 3 months prior to Election Day. The same thing happened to Democrats in 1952, 2000, and 2016. In short, it looks like a market fall between August and November is bad news for the incumbent party. So is it good news for Joe Biden? And should Donald Trump be worried? August kicked things off with big gains, but September has seen a decline in markets. Some investors are bracing for more volatility ahead. Trump has often cited stock market rallies as a sign of success under his administration.
Your stocks are going up, your 401ks are through the roof, but the stock market's at record levels. Think of it.
And President Trump is probably hoping that the August rally reconnects in October. Going back to 1928, incumbent presidents or the party controlling the White House have won nearly 90% of the elections when the S&P 500 was positive in the previous 3 months. Of course, it's hard to say whether stocks drive elections or elections drive stocks. National polls have shown Joe Biden ahead of Donald Trump, and that has sent the share prices of some clean energy companies to all-time highs. That's because the industries could benefit from the Democratic candidate's clean energy policies. But there's one thing on which most analysts agree. Markets are driven by many factors, including company earnings or the coronavirus pandemic. So in the end, whoever wins the election, it won't have as big an impact on the market as some politicians would have you think.
Well, we'll know soon enough, won't we? We will know soon enough. All right, so what are your thoughts about this second debate? Answer A, it would be 15 days since he first showed symptoms, so I think the debate should go on as planned with the appropriate safety measures in place. He meaning President Trump. Answer B, I think the debate should be moved to the following week, which means then the one that's on the 22nd would be moved to the 29th. Answer C, I've already made up my mind, and I really don't care whether this debate or any of them happens at all. So let me know your thoughts on that. I'll go through the list here. Thank you, Nellie. I'm glad you thought that video was encouraging. We try to find them, guys. You probably noticed I get a lot of these videos from the Wall Street Journal. They publish, I don't know, anywhere from 8 to 10 a week. Some of them are really long. Some of them are really dopey. And some of them are really good. And I try to bring those to you. So answer A, Martha saying, let's get on with the show. On with the show. B should be moved the following weeks from Karen. Hey, Karen, how are you? Good to see you. Charles, I've already made up my mind, and who cares? Greg, let's go ahead with it. Keith, I've already made up my mind. Who cares? A and C for Mark. Okay, Nellie, C, but I think the debates are entertaining. I think entertaining is probably a pretty good way to put it. Allison, A. Dr. J got a C there. Yeah, I think pretty much most of us in this age bracket are not still going, what do we think? And it actually, as time goes on, they really need to have these debates earlier, like in August, because by the time it gets to September and October, it's just too late, especially when the voting is now starting as early as it is. So anyway, that's how that plays out. So guys, you know the drill from here. You can find me at CB3 Financial if you want to watch previous YouTubes. And I just recorded a new episode today for Stock Charts, which is the largest technical analysis website in the world. I don't know, like 100,000 viewers or something, but I'm a new guest author for them, and they're kind of increasing my number of contributions, which is cool. But you can find those there on the YouTube link on my CB3 Financial site. Most of you have already subscribed, but get your friends too. It'd be really great to get a few more viewers on here, guys. Tell your friends, tell your family. The election is getting really, really interesting. The markets are getting really, really interesting. And COVID, well, we just need to keep up with, this race to get a vaccine out there in mass force. And then everything changes for humanity, literally. So that's a real positive. So be sure to continue to, and thank you for those guys, by the way. I was going to say continue to, follow me on Twitter. We were following, the debate last night and responding with a lot of you guys that were following my tweets in real time. So I'll continue to do that for the debates if they have them. Here's my contact info. And as you guys know, I always like to end with 2 Timothy 1:7. For we have not been given a spirit of fear. We have not. We didn't have it in March. We're not going to have it now. We're not ever going to have it, because we have a spirit of power, love, and a sound mind. It is my deeply held belief that we will not only survive this pandemic, this election, this market turmoil, but that we will come out as a stronger nation, stronger and better investors. And folks, don't doubt me on this. 2021 is going to be the very best year in many of our lives, and I'm really excited about that. Don't be skeptical, okay? Don't be skeptical. All right. Thank you for being here tonight. That's our program for Thursday, October 8th. I'm your host, Charles Brown, Portfolio Manager with CB3 Financial in Chicago. From COVID to the markets, to politics, to pretty much anything that's driving the economic cycle and your investments, this is CB3 Live.